Hello, everybody, and welcome to Coherra's Christmas special. We've gathered some of the great and the good here in the studio today to talk about, well, really anything under the sun, anything that you want to talk about. We've got old friends, everybody knows each other. I think it's the first time actually that you and I are meeting.
Yes,
Russell,
it is. Yes, yeah.
But Lars and Steen, we've known each other some 20 years. You've known each other for a long time. You used to work together, and for good measure, this is a free conversation where we just want to talk about what's interesting in all markets in the world, in geopolitics and asset classes. Nobody's bound by anything that they can or can't say, and it's really just a nice conversation among friends that we felt we'd want to share with you. So we hope that you enjoy it as well, and let's get started. I think for good measure, let me introduce who's in the studio. Obviously, we've got Russell Thompson, the CIO of Liberty Road Capital. Crypto trading is one of the things that you're very focused on now.
Yep.
And I'm going to ask you all just to say just a couple of minutes about who you are and what you do in a moment. Let me just introduce the rest of our group in here. We've got Steen Jakobsen, CIO of Limus Capital, to my left, and we've got Lars Seier, an investor at the moment, among other things, and of course also the founder of Saxo Bank too. So welcome to all of you. We've also got other people who we've spoken to here during the week up to this Christmas special, and we'll be listening to them as well and getting some stock picks. We'll be talking about technology, we'll be talking about AI, we'll be talking about global markets, central banks, China, the list goes on. So do stay with us. Now, let's get down to business and let's hear from all of you. And I need to say also that we've got this fantastic wine presented to us. Testamata is the name of the wine made by Bibi Gratz. And Testamata means crazy heads, something like that. So we thought it was fitting to have a little bit of an off-filter conversation here in the studio and to have a glass of Christmas wine together as well. So please do feel free to have a sip as we speak. So Russell, let's start with you, CIO of Liberty Road Capital. Tell us a little bit about yourself and about what you do now. I know we've all kind of had two lives, and this is maybe the beginning of the second life.
Yeah, definitely my second life. So I grew up on trading floors straight out of university. I spent a lot of my career in Asia, in Hong Kong. I ran proprietary trading for both HSBC and the trading floors in Hong Kong and Singapore for AIG trading, the good part of AIG,
Yeah,
not the one that blew the world up. Yeah. And then I founded my own hedge fund in 2003 with my co-founder Peter Hendricks. 2005, 2006, I probably met Lars. We were one of the first hedge funds that were dealing with Saxo. So we've known each other nearly 20 years, and I met Steen at the same time. I sold that hedge fund to a Chicago-based fund of funds back in 2018. And then I've been in Monaco with my own family office. And then I co-founded Liberty Road. And sort of it's a nice moment in time for me because I've just merged Liberty Road with another listed asset management business called Hilbert, who are listed in Sweden. And so in the new year, I'm joining their board, and we're going to be focused on building a great digital asset manager in Europe.
Okay, and why the merger? Like, why wouldn't you just stand alone and do that?
Because I think the way the wind is blowing in the regulatory aspect is having a listed regulated business. It's the top of the tree. So if you want to go after institutional capital, it just makes life much easier. So they had a good track record. They had a really good foundation infrastructure that we could leverage, and Liberty Road brought a lot of really cutting edge risk management. We've made our name on AI. My business partner, my co-founder, Tom Bowles, is an Oxford PhD in mathematical forecasting. So we've done a lot of work over 4 or 5 years on proper AI, neural network AI, which we're integrating in with Hilbert. So it was a marriage really that worked out well from both sides. We brought a lot to the party, and so did they. So I'm very happy with it.
Okay, thank you, Russell, for now. Steen, we've known each other for many years. You used to come into the studio at CNBC frequently. You're no longer with Saxo. unfortunately, right? But tell us what you're doing now, and you still put out predictions as well.
Well, yes and no. I mean, similar to Ross, I grew up in the proprietary trading. I think you said this third life. I think it's my second life. I think it's my third life, actually. I grew up in trading in New York and London for what is now JP Morgan and UBS. Came back, met Lars and his co-founder Kim. I said I was never going to work in such a small, crappy place as Saxo, but a mutual friend of ours called Jakobsen, who is no longer with us, said, I'll pay you really well to be head of trading for a year. So I stayed 24 years, and it's ended in April last year. So after that, I have taken on a pretty big portfolio of board member jobs. 3 listed on Nasdaq, one hedge fund in Switzerland. I do advisory for a family office out of Norway. And then I have 5 or 6 advisory roles, all connected to investments.
So very much still, you have your finger in the pulse with regards to, all the global movements, geopolitics, asset classes, all the stuff that we usually talk about.
Yeah. So as you're referring to, obviously, among the things we came up with in Saxo early on was the outrageous predictions. So that's still, for some reason, I'm still very busy every December, despite not me being responsible for Saxo's version. But I would say it's probably the busiest December I've had in a long time, just doing interviews based on what people talk about for 25.
Yeah, and you put out the impossible possible predictions, or you've done that this year.
That's my new one, yeah.
And we'll get to that in a minute. Lars, last but not least, Lars Seier, as Steen says, co-founder of Saxo Bank. Tell us a bit about what you're doing now and where your focus really lies.
Yeah, I mean, I was with Saxo Bank, obviously, most of my grown-up life. But just like these gentlemen, I had a relevant history before. Maybe not quite so relevant because I started out having a bar in southern Spain. But after about 4 or 5 years, which was an awful lot of fun, I thought, is that really what I want to do the rest of my life? And I had a good friend in the London markets that said, Lars, I did quite well without having much of a background. Why don't you come over here? And I went to London when I was like 23 or 24. And did my sort of baby steps with various brokers, and then founded Saxo Bank together with Kim in 1992. So fast forward about 26 years, I sold my last about 25% of Saxo Bank in 2018, and since then I've focused on basically, I don't know if you'd call it a family office, but my sort of odd collection of investments that are very much driven by what I find fun and interesting. Of course, some of it I also hope to make a little bit of money on, but I have a very odd portfolio without much of a red thread, except I find it interesting. So that's anything from some very good restaurants to some people that do artificial lab-grown meat, a lot of blockchain, crypto, basically whatever takes my fancy. I think I love my time in Saxo Bank, but for now I sort of reserve the right to do a lot of crazy stuff that I just find exciting and fun.
Great. Well, you mentioned a couple of things that we'll be talking about within that. So I think most people now are just struck by how far the rally's gone in the last, 4 years, 3 or 4 years really. But this last year, I feel like coming into 2024, a lot of people were saying, well, this is the year where we're going to see some softness. We're going to start to see the rally peter off, and that simply hasn't happened, at least not when you're looking at stateside equities and especially in tech. Is it going to continue? Are we going to see 2025 be the year where we continue to see some of this momentum that we've seen in the past, Lars?
I don't follow the public markets too much. The vast majority of my investments are like startup or off-market things. Mm-hmm. I think the only major position I have is actually the company that owns FC Copenhagen, the football club. So I do have at least one listed stock there and a few early things that have subsequently IPO'd. But I don't follow the markets that closely. But for many, many years, I think Steen's a little bit the same. We kind of like to predict disaster, and we like to catch crashes because, things go so fast. You can make very fast money if you get it right. But in recent years, I've got a little bit bored because there's a lot more of the time where the market just goes up than trying to catch these occasional crashes. So while I think that it's very hard to justify the valuations you have at the moment, it's it's also very hard to keep calling the crash, right? So, so in recent years, I've been a little bit more pragmatic about it. As long as it goes up, and if it stops going up, then we'll have a look again. But given that it doesn't mean very much to my portfolio, it's actually not something I follow very closely.
Very understandable. It must mean a lot to your portfolio, though, Russell.
Yes, we have a global macro product, and obviously, but we're focused on digital assets as well. But I think that if you're going to look for truth in the financial markets, then I don't really look at the equity markets. The equity markets can be manipulated. They're right until they're wrong. So I really pay attention to the fixed income markets, particularly the US Treasury market. And I think that we are in for a very, very interesting 2 or 3 years ahead with the new Trump administration. And I think that, and I'd hate to say whether he will be successful. I think he's got to thread a very fine line here to be successful. It's possible. But the situation and the global imbalances that we have at the moment, the fixed income market is clearly a little worried. You're seeing that in the last month. You've got a bull steepener going on in the US. You're up 25 basis points this month. 10-year US Treasuries are above 4.5%. I think people should be concerned about that, and I think they go higher. And I think the fixed income market is going to be the litmus test. And if we're going to get a crisis in global financial markets, that's where it'll start.
China's short end of the curve also, the 2 years at 1%.
China's going to embark in aggressive QE. They will probably devalue the renminbi as well, I would think. I think Xi's policy is going to really be dictated by what Trump does and whether he follows through on these tariffs. But I think that's where this goes, where all of these and Steen's sort of outrageous predictions, really in the next 2 years, we could make some outrageous predictions around this table today, and a number of them could come true. I think we could see some stuff that happens in the next 2 years that we just will have no idea is coming, and it could be quite the ride.
Like what?
Oh wow. Well, the devaluation of the renminbi, I think that there's a very good chance that we're going to that there's going to be significant stablecoin freedom of regulation to allow banks in the US to adopt stablecoins, which is going to be a get out of jail card for Trump to basically try and generate some US Treasury demand and interest. Could we get a deval of the dollar against gold? Trump's a gold bug. Gold is valued at $42 on the US Treasury balance sheet. And they've done it before. Bretton Woods, they called in all gold holders at $25 and revalued and devalued at Bretton Woods at 40. Trump has to go big and hard next year. The November midterms, they're 2 years away. The electioneering is going to start for that at the end of next year. He needs to go big and he needs to go hard, and something like that could be a way to do it. So a combination of sort of some favorable Bitcoin policies, which could generate some US Treasury interest, along with something that a deval in gold, tariffs, I don't know, anything could happen.
Steen, does this fit into your, the impossible possible that you put out now?
No, I think just as a side remark, I think it's very difficult to be outraged in a world where Trump becomes president, where Milei is having huge economic success of using a chainsaw to the economy, and you have the Middle East. Syria is, in my opinion, the 1989, the Berlin Wall version of the Middle East. So I think, when we started 20 years ago to make outrageous predictions, it was pretty easy. The world was flat. Now it's a very, very changeable world where people. And what I find frustrating, and I'm going to sound like an old man, is that no one really deals in facts anymore. People deals in emotion and sentiments. So going back to your original question, what's going to happen to the stock market next year? Similar to these two gentlemen, I don't really focus on that. What I do focus on, and if I ever had any success in forecasting in the past, it is because most people try to predict what will happen. What I try to do is to say, if now Ross is indicating potentially we could see 10-year at 5.5, 6. That in itself, of course, is interesting as a trade. What is more interesting, and where, in my opinion, there are more money, is what is the policy response at 5.5. The policy response has to be some sort of yield curve control. And by virtue of the yield curve control, you basically devalue the dollar, because there's only two ways you attract capital into the US, is either to offer a high enough yield or to offer a cheap enough dollar. So if the yield is out of the equation, then the only thing left is to make the dollar cheaper. And I think
It's
that's
a race to the bottom, isn't it? You know, the reality is that it will probably not be official policy, but they're going to pursue a weak dollar policy. Trump is for sure. I think you are going to go zero bound in Europe pretty quickly in the next year. So they're going to be pumping and printing money like there's no tomorrow. They're going to be doing it in China. So on the sort of what happens on the global currency markets, that's a harder one to call, and it could be quite cyclical. I would say, if I had a gun to my head, I'd say the dollar probably goes up into the first half of next year with Trump. Europe is in a right old mess. You have two of the largest economies in Europe do not have functioning governments. You've got the Eurocrats. I think that, another outrageous prediction, I think Macron has got Basel III in his sights. I think that if the US are not going to abide by Basel III, he'll rip it up. And I think there's every chance that you get legal. Macron's made a couple of really big speeches this year. I'm down in the south of France, so I pay attention to what he says, and he clearly is worried about the amount of European capital that's flowing out of Europe and into the US, without doubt. He said it explicitly. So it's not beyond the realms of possibility that we go for some legal remedy to that, and pension funds and investors are maybe not mandated, but coerced in some way to start buying European fixed income, which is going to be yielding less and less and less.
It's interesting, because it's actually one of my strongest conviction is on the basis of what Ross had just outlined. I'm hugely bullish on Europe, exactly because it's so bad. And where Russell ended, I'm going to take over, because I think during 25, a new political force will emerge inside Europe. We see small signs of it. One is the Prime Minister of Denmark. The other one is some of the other governments in Europe, which is that we need to move towards a fiscal union indirectly. How do we do that? Okay, Europe's biggest problem right now is on defense spending. It's significantly below the level it needs just to take care of itself, leave alone whether it's going to be a force in the world. Why don't Europe issue a pan-European defense bond that is forced fed into fixed income pension funds and the likes? And to be honest, it's not going to be a loss for the pension funds, because right now they're buying nonsense renewable energy projects, which is going against the normal evolution of technology as it is. So I think we are very, very close to a turnaround. The other thing is that a country like Sweden, which has been down the drain for a number of years because of its, at least what outsiders says, immigration policy, because it's been too vogue and everything else. Let me ask you sort of an indirect question here. Which country in all of the Western world do you think is cutting taxes? Sweden. Sweden is really moving toward a different place. And what is super interesting about the Swedish is that the Swedish krona is cheap. But more importantly, what is it that Europe needs? It needs commodities, it needs energy, and it needs weapons, and it needs sort of the electrification, all of which sits significantly in size inside Sweden, one of the cheapest currencies, one of the cheapest economies. So I think if you are nervous from the starting point of your question, whether the US is too expensive, right now I'm moving a significant amount of funds out of the too expensive 28 PE forward-looking valuation of US and put it into deep discounted European because the consensus out there is you cannot own it. The pension fund cannot buy it because the way they are set up is that they can only have a tracking error of 1% against the MSCI World. The MSCI World is 70% US, and 70% of the US index market in itself, no, 35% of the US market is 6 stocks. I mean, if something goes wrong, it's not the valuation per se, it is that everybody, and I mean literally everybody, owns the same in this world. We saw it this week in Denmark on Novo. I just checked of available free research in Denmark. 18% of it sits in Novo. 18% in one stock of all the net savings there is in Denmark.
But we often see that just on Novo. We see that sometimes, quite frequently, in pharma stocks or in like biotech stocks, where if investors first are betting on something happening within like a new release, like Ozempic has really given Novo that boost, then they pay even more attention to these pre-trials, and then we tend to see a lot more volatility also sometimes in these pharma.
Sure, but I don't think, except for Nokia, I don't think you find a country and a stock which has represented such a net wealth effect on one country. I mean, this could literally take Denmark to negative growth on its own.
I understand. You mentioned Europe. So I spoke to David Wu, the CEO of David Wu Unbound, earlier this week as well, and he was saying that he thinks that there's going to be peace in Europe with regards to Ukraine and Russia, and that in 2025 that we're heading in that direction. And if that happens, then that's going to be a huge positive for Europe.
I think for me, the big theme, the big overarching theme, investment theme, I think of 2025 is what I call world peace. And why world peace, and why does it even matter to investors, you might ask? I mean, there's no doubt in my mind that the geopolitical fracturing of the past 4 years under Biden has largely shaped the macro environment. I would argue the geopolitical fracturing that started under Biden is the reason behind the outperformance of the US economy, the outperformance of the US stock market, the fact that the dollar is trading at a 40-year high. So for me, Trump, basically world peace for Trump is not just a foreign policy objective, it's an economic objective. In fact, it's central to Trump's goal in terms of his economic plan. And I think from that point of view, I personally think, for me, world peace has 3 components. And then in terms of what they mean for markets, for investors. The first component, of course, is that I think, we're going to see the end of the Ukraine war very soon. I've been saying this for basically a while, that as soon as Trump gets in, the Ukraine war is going to be done. I mean, for lots of different reasons, which we don't need to go into right now. But needless to say, at this point, I think that actually Trump's got the ear of both Zelensky and Putin. I think that actually Putin needs this peace as much as Zelensky at this point. I think if you look at how the Russian ruble has been doing lately, you know that the Russian economy is not doing well, especially with the slide in energy prices over the last 2 years. So I think there's a deal to be made. I think a deal to be made there between Russia and Ukraine, to me, in foreign exchange world, should be seen as being pretty bullish for the euro. Because there is no doubt the biggest loser of this war in Ukraine, which the US started, mind you, it was the US that left basically Russia with no choice but to invade Ukraine, because US wanted to basically drive a huge divide between Germany and Russia. And that's the way they went about doing it. There is no doubt the biggest loser of the war in Ukraine has been Europe. There's no doubt about that. This is the reason why we've seen a complete hollowing out of the German manufacturing. This is the reason why German manufacturers have been fleeing Germany to the safety of the US and even China for that matter, because of a massive increase in energy costs. To me, I think that as much as I think the Germans, have been complicit in this war that's lasted too long and has killed hundreds of thousands of people, I think the bottom line is that there's an election coming up in Germany, as you know, in January. I think, regardless of the fact that I think, most likely we're going to get a continuation of the Grand Coalition, except with Christian Democrats as the head of the government, I think this peace negotiation between Ukraine and Russia provides Germany with an opportunity to pivot in terms of Germany's relationship with Russia. I think better relations between Russia and Germany is going to be the only hope that German manufacturing has in terms of accessing cheap energy in order to remain competitive in the face of Chinese and American competition. So from that point of view, I think the euro is going to do better next year. But to against which currencies you might ask, I think the euro is going to do better against the Swiss franc. I think that's a sort of the safer trade.
Do you think, first of all, that we're going to see peace? Are we heading in that direction for 2025? And what do you think the impact could be if we are?
I think the chances are greater with Trump than they would have been under Harris. But who knows? Honestly, the geopolitical black swan risks out there are enormous. So we've not had a period like this. I would say, gun to my head, there probably will be peace. I think it's in Putin's interest. I think that Trump wants it, and I think he will sort of give Zelensky a deal that he can't really turn down. But you just don't know. You know, who knows what's in Putin's mind. But I think to Steen's point, I think if you get peace in Europe and you get some stabilization and you get a rapprochement between Russia and Germany, and that has the knock-through effects on energy prices, etc., then the outlook for Europe is a lot better. I think it needs it. It has to happen.
Because Europe has really borne the brunt of the Ukraine-Russia conflict, and we've seen a lot of money flowing out in certain areas, like I guess German automobiles, for example, like manufacturing, like a lot. You know, Europe has really carried a lot of the pain that has been inflicted from this conflict.
Yes and no. Surely Europe has had the biggest impact, but I don't think we are where we are in the world because of Ukraine. If you look at the stock markets and the capital flows, we're here. I mean, if you look at long-term economic growth, how does a country become rich? There are really three ingredients. One is the cheapest energy wins. Whoever has the cheapest energy wins the race. Number two is that the productivity drives everything. If you reduce economics to just two factors, it's demographics, which is, you know, people's sexual activity, and the rest is productivity. We have the lowest productivities because of the Berlin Wall. We have this peace dividend where we decided not to invest in our infrastructure, but take all the profit to the bottom line. And the third one, which is to some extent driven, to be honest, by Trump, but also sort of the all sort of this challenge we have with the Vogue environment, is that it's now okay to talk about deregulation. So if you put together, it's basically productivity, deregulation, and cheap energy that's going to drive long-term.
But do you think deregulation is coming in Europe?
Yes, absolutely. I think if you do the defense, imagine we do a defense bank. One of the things you have to do in that process is to circumvent all of the safety protocols, all of the red tape that needs to happen. If you need to build missiles to protect Europe, you need to build missiles. If you need to do cybersecurity at a certain level, you need to circumvent that. And the other thing is that if you look at the biggest venture capital fund in the world, it is the CIA and ESA, right? If you do the same thing in Europe, maybe even in a NATO environment, you should build the biggest technology hedge fund in the world inside these institutions with the money that you get from the markets. Because the way you get peace is to have a strong defense. And the way you get a strong defense is by investing in the private sector's side of military spending. It's not because we're going to shoot people down. It's simply because, you know, having a strong military means you have the fastest internet, you have the best way of doing logistics, you have the best way of exercising your society.
Let me just bring in what David Wu was talking about earlier this week. David Wu, the CEO of David Wu Unbound. Here's what he had to say with regards to the euro, first and foremost.
I think that, you know, the euro is going to do better in 2025. And I think, you know, the safer bet, of course, is that the euro is going to do better against the Swiss franc. Especially after the S&P cut 50 basis points, it's very clear to me they want to basically put in the floor for Euro Swiss. So I actually like Euro Swiss, higher Euro Swiss, as potentially, like, you know, a peace trade for Europe, okay? And obviously DAX will do very well in that environment. I think Ukrainian government debt, the 2034 Ukrainian government dollar bond probably can continue to rally if we do get this deal, because the US will have to dangle a lot of money in front of Zelensky for him to basically cooperate. I do think that some of the defense contractors in Europe, I think they're an easy sell right now, especially Rheinmetall, which I think is completely overbought, and I think that thing's got plenty of downside. So I think that's an example of a bunch of trades that will benefit from world peace.
Lars?
Yeah, we're sort of moving into politics now, which frankly interests me a little bit more than listed stock markets, and I think there's obviously a lot of very interesting stuff happening. I'm very sure that we're going to see a peace in the Ukrainian war conflict this year for a number of reasons. It's clearly a big strain on Russia, so I don't think they're particularly keen on continuing this if they can find a face-saving way out of it. Secondly, I have a business in Ukraine which actually works fairly normally in spite of the difficulties, and hence I speak also to Ukrainians, hear a little bit of feedback from the sort of average Ukrainian, and I think they're very tired of this war. I'm not sure Zelensky is really representing sort of the bulk of the feeling in Ukraine, and I think the average Ukrainian is willing to take quite some pain to get this over with, because I'm a strong believer that with Trump in place, a solution there will be found relatively soon with whatever impact. These guys are better at evaluating that impact, but I think we will have peace. Now, the other thing I think which has been sort of touched upon is, as a businessman that's interested in politics, you always have this feeling it would be really interesting to see some business people running an economy rather than politicians, right? And I think actually we have a chance of seeing that now with the Trump administration, right? The Democrats are out there saying, "Oh, they're all billionaires in the administration," and that, and I kind of think, it doesn't make you a genius that you're a billionaire, but if you made $1 billion, you're probably not that stupid either, right? So I think it's going to be very interesting to see people taking a more business-like approach to an economy and to public sector spending and all that. So, and it might very well be very disappointing because, of course, a lot of this is tied down in very long-term commitments, etc. But I think it is very interesting to see whether the sort of group of quite capable people, albeit odd and controversial characters, many of them, to see whether they can actually change something in something like a very, very, very established economy like the US. And what we're seeing in Argentina, for example, that you mentioned briefly, I think is super interesting. As a libertarian at heart, I really do like to see a guy that's trying to put some of this stuff into place that we have talked about and read books about for decades, and actually that the immediate impact that he's had in a year. I'm sure there's a lot of pain around in Argentina, but the stuff that has changed already is quite extraordinary. I don't think Trump and Musk and whoever can do it to the same extent in the US, but I am really looking forward to see what a bunch of smart business people can do with an economy, because my feeling about politicians is that they are not particularly well suited to run countries, and I look forward to see how a different group of people will do it, because if we try to shift something in Europe, I mean the arguments about shifting 0.25% of GDP from this expenditure to that is enormous. You want to try to cut taxes by 1%, the political propaganda machine immediately tells you that everything is going to collapse and there's going to be total poverty everywhere, right? And this is an impossible conversation. I'm unfortunately not as optimistic about Europe as you are. I really think we are a basket case and very, very hard to change. We're also seeing winds of change here, but that's a different kind of change, like Marine Le Pen and Alternative for Deutschland and those kind of characters that I don't like very much, and are certainly not libertarian or particularly smart either. So, but we really have a chance to see what's going to happen in the US, and obviously how far the Argentinian experiment can go, and I find that quite fascinating. But on the war, I'd be extremely surprised if that's not sorted out by middle of the year.
You mentioned a lot of things. I mean, I guess with regards to the US and the policy change and the US being run potentially more by kind of business people. Someone said that there's this trapeze artist phenomenon going on in the US where if you're a trapeze artist, the one thing that you learn is you don't let go, or you don't jump off your platform before your partner's swung out already. And so you've got, for example, the Fed or policymakers, if you're looking at monetary policy or political/monetary policy, where it's hard for them to make moves before you actually know what's going to happen. We can guess what's going to happen under the Trump administration, but we're not 100% sure yet. I guess one of the things that I've been looking at is you've seen changes at the top, also within the SEC, and you've seen, the previous leader of the SEC was the one who was like severely bearish on, or severely a disbeliever in the entire digital asset market, and now the person who's being put in place really wants to pave the way for opening up this market and making it so that lots of bigger funds are able to include digital assets, for an example, in some quite mainstream portfolios and in a mainstream type investing. So in that way, I guess going back to some of the points that you were making also earlier with regards to whether we're going to see recovery kind of on a broader scope, maybe some of that might feed through to Europe in terms of how we think about things or how we think about investing and broader markets and broader asset classes?
Well, hopefully, if some of this works out well, people will try to learn. I'm not overly optimistic, but because we kind of know what would strengthen an economy, and it's still not getting done, right? But of course, if we have some shining examples of this working, it'll be probably easier to convince the electorate that it's not going to be the end of the world if you cut taxes. It's not going to be the end of the world if you move some public sector services into the private sector and expose them to competitive pressures, etc. At the end of the day, you know, I think it's fair enough that an electorate agrees that a lot of stuff is paid for by the state. But unfortunately, in Europe, we think then it also has to be produced by the state, and that's where the real problem starts. You know, if you do a lot of this stuff in the private sector, while perhaps being paid through voucher systems, etc., by the public coffers, that still is a completely different game, because then you have real competitive pressure for services. Most of the services we receive in a social welfare state like Denmark or the rest of Europe is all monopolized services, which is why they don't work very well. You know, you have one group of people delivering the hospitals, you have one group of people delivering education. You don't have competitive pressure, and there is absolutely nothing wrong with saying the state should pay for my education and my welfare and my health cost. But the sort of the rational intellectual mistake is to also think that it should produce all these things, right? So I am excited about seeing this. I am very pessimistic about Europe, because I do think we shoot ourselves in the foot consistently. You see, but just in Denmark, I think pretty much Saxo Bank and maybe Netcompany are the only companies in Denmark for the last 30 years that created like more than 1,000 jobs of new companies, which is extraordinary. But there was a number of people that left Denmark and went somewhere else and did it, right? Because it's just not that attractive to do business in Europe. So I would love to be your idea about sort of a joint fiscal policy. You know, I've always been extremely skeptical of the euro. I think when you are Danish, and we actually, you know, in spite of high tax prices, at least we have a relatively solid financing, etc. We don't have the debt problems that you have many other places. And for us to sort of throw our hats in with Greece and Spain and France and Italy and share the debt, I think is a disastrous idea. But you know, let's see.
But it'll be a very interesting juxtaposition of the two, because the US is clearly going supply side economics. You know, Trump is going to go and do the Thatcher, the Reagan, deregulate. Musk, and I would completely agree with Lars. I think it's going to be a very interesting experiment as to how these entrepreneurs, Bojesen, Musk, Trump, who have made their money in the private sector or hedge funds, how they deal with running an economy, because really you're just talking about a balance sheet. So how they deal with that is going to be extremely interesting. In Europe, it feels like that we have the Eurocrats who are at odds with a lot of the populations, and there's just extreme dissatisfaction. The European Commission is predicting 1.5% growth next year for Europe. I think they'll be lucky to get anywhere near that. So we're going to see rates down. We're going to see QE up. And I'm sort of more in Lars's camp. I think that there needs to be some radical change in Europe. And if we don't get peace, it's going to be ugly.
I like to make one comment, because I liked Thatcher a lot as well, right? And I actually had the good fortune to live a couple of my years in London towards the end of her period as Prime Minister there. But the interesting thing is, with all the changes she did and all that, when she left office, the overall tax pressure in the UK was slightly higher than when she entered office. I mean, just think about that, right? These sort of institutionalized government institutions and functions, etc., are very hard to shift, even with the best of intentions, right? And that's also why, although I am excited about Trump and his people around him, I would think we're probably going to get disappointed at this total net effect when we look at it, because if Thatcher couldn't, over her 10-year reign or whatever it was, if she actually tax pressure went up by 1% from when she entered office to when she left.
But that's
right?
no surprise, because I find it hilarious that Reagan is the big hero for libertarians, but it was Reagan who started the non-finance deficits in the U.S. Prior to Reagan coming into government and the supply side economics that came with that, U.S. ran a pretty balanced budget deficit. Ever since, it's been good medicine to say that if I cut the rates, the tax rate, I can create more net demand in the economy, which of course never worked. And now we're in a situation where supply economics has run amok and is going to be, on speed during Trump. I will make one outrageous prediction. I will bet a big case of anything that Musk is not going to be in government or part of government inside the next 9 months. And that's not because I don't like Musk. It's just because you see every single picture there is in the public space right now is a picture where Musk is sitting behind the desk at the White House, and Trump sits in a baby chair next to him. I mean, there is this very clear upstaging of Trump by Musk, and if that's one thing we know,
didn't it? It just happened with the government shutdown bill, because it was Musk's tweet that triggered all that.
Musk is going to take the blame for that if it doesn't come to fruition. So you will see Musk is out of there before it even started happening. And then I also have to comment that I find it kind of ironic that you have Musk calling for a suspense of the public sector spending, considering he's never, ever done a single project where he hasn't had his hand very, very deep into the pocket of the U.S. government. So it's totally inconsequential. And the third thing being, as I believe, as much as Lars in libertarian ways, but if we're going to look for someone who can make a difference, it's Millet. He's doing the Chicago model. He's doing the right thing. And he's doing one thing that Trump and Musk and all the other oligarchs that sits in the government in the U.S. right now is not willing to do. He's taking the economic pain with the medicine.
Well, that's exactly the point, right? Because
it is
the Argentina and Iceland, Argentina are now getting the benefits of that. Iceland got it a few years ago. But we've lost moral hazard. We're not willing, politicians in the West are not willing to take the pain, and Argentina has taken it and they're going to be the better for it. But we balked at this. We balked it in 2008. We balked at it over COVID. Moral hazard is gone, and sometimes you need a reset. And maybe the US, the bond markets will generate that reset.
Just a rhetoric question. Name me all the countries that's been an economic success the last 20 years and correlates that to whether this country has been in a severe crisis where they've taken the economic pain. Greece, Ireland, we can continue, Argentina.
Yeah.
Iceland.
They're all economic tigers now.
They've all been through a resetting of the parameter, which goes back to your point, which is we have no accountability for the politician. We have no accountability for the central bankers. We have the worst crop of central bankers ever in history. The reason that the interest rate in the US rose so sharply past the last FOMC meeting is all of a sudden, finally, everybody agrees and understands that Powell is in the business to finance the US government, which, by the way, is not his mandate. But the only thing he's trying to do is to keep the boat from rocking so he can continue to finance
so
at the short end.
Exactly the same, it's the same conversation.
Yeah.
We've got a lack of leadership just at the central bank level, but at the politician and the leader level.
Inability to talk about the cost of what you want to achieve. So you can have 10 voters in here, and they have all sort of things, and the politicians generally just promise. What the politicians should say, how much are you willing to offer for getting your priority 1, 2, and 3?
How badly do you want it?
How badly do you want it? What is the 2 most important things in your life? Don't mention me 10 things, but if you want to improve the healthcare system, okay, let's do it. But how much will you pay for it?
Okay. No free lunch.
Yeah. I want to gently bring it back to things that are tradable, like more tradable. And I know that you spoke
Long
to
Argentina.
Long Argentina. Well, Argentina. Oh, and you mentioned South Africa as well, and Turkey as well in recent writing. Are we going to see outperformances from some of these emerging markets?
You are going to see outperformance for countries that own the resources, which are cheap, which countries which are deregulating, and countries that are going through a process of resetting. South Africa is doing exactly that for the first time since the change of rule. The middle class in South Africa is now trying to be positive and constructive.
Yeah.
You see deregulation. You have a phenomenally strong stock market where some of the names are world-class names globally. The same is happening in Turkey, funny enough, despite the political sort of atmosphere there. But I think for me, something like Argentina is a hugely interesting thing that at least just on moral grounds, I need to be long Argentina to support what is the right, putting together the aspiration of trying to change society to a better place and then putting your money with it.
So I agree with the idea of that Argentina is the most important and interesting experiment right now. And I wouldn't mind putting a little bit of money behind it. So what exactly should we buy in Argentina?
Do you like Druckmiller did ask Perplexity IO, what is IO?
Great project, by the way.
Yeah, great project. He asked, I mean, he did the story, I think, 9 months ago. He said, he saw when Milei did, he asked Perplexity, what are the 5 biggest ADR traded in Argentina? You should do the same. Or you could just buy the MSCI shares, MSCI Argentina. MSCI Argentina just made new highs for the year while the US is coming a little bit off. So, you should buy what is deregulating, what is open-minded, and which is willing to take the price of what you do.
How about energy, Steen? Because I know that you spoke to Ross McIntyre, energy trader. Tell us a little bit about what you spoke about and kind of where some of the interesting points are in that.
Yeah, so I mean, and I know these two gentlemen are going to talk a lot about the whole tokenization, the cryptos and all that. But the one thing we need to understand, and let me put one headline and then go to what Ross says. In 2027, there's 40% of all data centers in the world is going to be short of electricity. So we ended up in a situation where the real economy, the one that produces electricity, water, sanitation, and everything else, is way too small for the growth rate at which we are growing, especially in AI and trader. And just as a reference, it costs, if I do a Perplexity or a ChatGPT search, it's 10 times more energy than doing it on Google. So we're doing a lot of stuff that looks smart, and people and companies are investing huge amount into this. Microsoft is, have sold, nothing, no real, in real terms, no Copilot. They make earnings about $2 billion on Copilot, and they're spending $100 billion to build out their facilities. There's a mismatch between all this. This creates a situation where we basically in Europe can run out of electricity. Certainly companies can very, very likely run out of capacity. And we at the time right now, big issue for Europe, we pay 2 to 2.5 times the price of natural gas in the US. I talked to Ross about that, and in a minute we'll hear some of the things he said, but the way we have constructed the European energy net is that we don't have capacity to deliver, and we don't actually have enough baseload to be coming in. And I think we should just listen to some of the stuff that Ross says.
Probably the word for 2024 is Dunkelflaute, which is this period of very fogginess, very still, no wind, and we just don't have enough thermal capacity to meet demand. And so when we're seeing these prices of nearly 1,000 euros coming into play, it's the marginal cost from the gas is 100 euros. And we're paying nearly 1,000 euros. And nobody's questioning this. And everybody's accepting this. And the difficulty now is that demand is coming back. So demand from industry isn't coming back. But what we're seeing now is that the residential demand is coming back with huge appetite. And so year on year, residential demand is up over double digits across the Europe. And that is particularly because we've seen the private sectors having received double inflationary busting wage rises for 2 years. The public sector now is also getting their wage rises. And what we're also seeing now, of course, is that this winter is not as warm. It's just not as warm. And so when you put all of this together, we're seeing demand at the highest levels that we'd seen for 5, 6, 7 years. And so storage is coming out of Europe the fastest it's ever come out since 2015. It's a serious problem for Europe. Listen to a scenario like this. Say, for example, we've seen TTF, which is the European gas price. We've seen that move from 50 euros to 25 and then back to 50 euros. And the reason why is because there's very little dynamics left in Europe to either remove molecules from the system or create demand. Because in the old days, you'd have a huge amount of coal-fired generation. And so as the prices of gas went up, then you would burn more coal. And so you'd burn way less gas. But what you're seeing now is that without that coal, you've just got to burn gas. So in all of these Dunkelflautes and in the future, you're going to burn gas. And there's there's no alternative. So we're in competition. And we're not in competition with ourselves or with the coal. We're in competition with the rest of the world, and in particular Asia, and in particular China. And China are at the very, very start of their rollout of gas. Their generation is sitting at 3% of their mix. And yes, they're doing incredible things with renewables. But having been a person that's lived through the dash for coal by China, and during that time, it was indiscriminate, their demand, and the price for coal just went astronomical during the time of the OOs. And so what we're seeing now is that if they do something similar to LNG, to gas markets, which then means LNG, because LNG is a huge part of where they're getting the gas from, then we're in competition with them. And what you could then see is that these price rises that we're seeing, we could go a lot higher. Because if we get in a situation, if we get a cold January, for example, if we were to get a cold January like the old days, like, just humor me for a moment. I know we're in this climate change and we don't get winters like we did in the 80s. You know, the last proper cold winter, was 2010 going into 11. But what if we did? We get an early, sudden stratospheric warming event, and this lasts for 6 weeks of cold. Then Europe, we're down at 15 or 20% storage come the end of winter. And we've got to get these molecules because the politicians in their wisdom have told us we have to fill by November the 1st. And there's no other gas that's come from. And we're in competition. And China as well needs the gas. India needs the gas. Bangladesh needs the gas. Egypt's economy needs the gas. So we're in competition. So where do the prices go? And of course, you're in a precarious situation, Europe, because then suddenly prices not only go, at the moment, they've relaxed a little bit because of some warm weather and we're going into Christmas time and the pressure on the spot prices come down a bit. But then suddenly we go to 50, 60, 70 euros. And suddenly in this scenario, the TTF is acting the role of oil in the 1970s for Europe and becomes extremely inflationary. And at a time when the ECB are trying to aggressively cut rates. And of course, when you're having these high gas price, then when the wind doesn't blow or when the when the sun doesn't shine, then we're setting extremely high prices. And we've got a potential inflationary problem in Europe. I think the expectation in the market is that the prices will come down and will collapse, and we had that expectation coming out of last winter, which was super warm, super windy, super wet, hydro was great. We had lots of wind generation and we had lots of gas left over. But at the same time, there was no demand. Last winter, people still had still the media campaigns from the politicians across Europe to make sure that they weren't turning up the thermostats. Now, everybody's back going, well, I can afford this. And I'm sticking it up. And there's still room to go into next winter. So the expectation is for the gas to come down. The big surprise will be for prices to go higher. This is the big surprise, Steen, for prices to go higher and higher and to continue higher. And I think the possibility of that, is really significant. You cannot rule it out. And I think the ECB are extremely should be extremely worried by this, because you're not going to see a low energy price.
So one of the things that Ross is very nervous about is that when we come into the summer next year, when we got to rebuild all of these storage that we have in Europe, and we have a mandated obligation to have 90% at all times reserves in natural gas. One cold January will be enough to empty it down to 20-30%. And the thing is, the whole world is moving to the same theme, which is that baseload comes from natural gas. And we are really competing with the Chinese and everybody else. Yes, there is coming more from onshore US to the rest of the world, but we have a shipping capacity issue. I actually sit on one of the boards that do that, Flex LNG. And we have issues of actually just getting it to the utilities. So it's fine and dandy that we have windmills and solar panels, but it's the wrong kind of energy, because it's not base load, it's not at the time you need it. And if you happen to have a period, as we've seen over the last couple of months, where there's no wind and no sun, we all of a sudden paying 70, 80 euros for our electricity. So we are running up against a huge deficiency in energy delivery.
Okay, and I want to get your responses in a second, because Alex Gunz also spoke along similar lines with regards to the power grids and what's needed. Alex Gunz is a fund manager from Heptagon Capital, and they're looking very much at the kind of the secondary AI plays, and he's picked a couple of stocks for us. So let's just take a listen to what Alex Gunz from Heptagon Capital has to say. Okay, so take us through some of your stock picks, Alex, which you do so well. I see you've got a company called Quanta Services highlighted as your first pick. So talk us through what they do, who they are, where you could get more information on them.
Yeah, thank you. We've been investors in Quanta for about 2 years now, and it's a wonderful story. Really think about it like this, that even prior to us talking about AI, grid infrastructure in the US, in fact, probably pretty much everywhere in the developed world, is actually very old. It's not built for purpose today. It was built typically just after the Second World War. And the sheer amount of people on the planet, the amount of power they are consuming, and really the acceleration of this in the world of data means that grid infrastructure is creaking, it's under pressure, it's also susceptible to cybersecurity attacks. You add in AI into this equation, and it's very reasonable to believe that power demand, electricity demand, is going to double between now and 2050. That's what McKinsey is saying. So this is really where a business like Quanta actually comes into the equation, and to our mind is absolutely critical. They are the largest installer of grid infrastructure in the United States. And so effectively, every time a piece of grid infrastructure needs upgrading, every time you're plugging in something new into the grid, like a new solar plant, for example, you probably need to go to Quanta. They've got very skilled engineers. They've got a huge backlog of business, about $30 billion at least, on my recollection, and that gives great visibility going forward.
And in terms of the actual company, the time frame for some of these upgrades, do you know anything more about what we're looking at there?
I think this is going to be a rolling program, Louisa. I mean, the backlog I sent speaks for itself. As we said, over $30 billion. That's equivalent to at least a year of forward revenues for this business. And effectively, every quarter, when you look at the operating data or the KPIs that this business releases, and it's very clear that backlog is only heading in one direction.
Okay, Alex, let's get your second pick, GXO Logistics.
GXO Logistics, another wonderful business and a company we've been invested in since about the start of 23. And really, this is a very simple story. If you take any well-known consumer brand, a business like Nike, for example, their expertise is in designing trainers and making their trainers cool. Their expertise is not in shipping that pair of trainers from their warehouse to your front door. And typically, logistics accounts for about 3% of any business's operating costs. And yet the impact that bad logistics actually has on consumer experience is disproportionately high. There's therefore a huge amount of logic for businesses to outsource their logistics to a third party. GXO is the biggest publicly listed player in outsourced logistics in the world. And what's really exciting to us about this story is that they are one of the few businesses that we've come across where they are actually tangibly using AI today to deliver clear benefits to their end customers, like a Nike. If you think about it like this, a warehouse is a very, very complex environment. You've got lots of goods coming in, you've got lots of goods going out, you've got a huge number of SKUs or stock keeping units, different items, and therefore actually being able to move things around very efficiently, knowing exactly what's where, using algorithms to improve the order in which goods are picked, managing inventory. And these things are really the perfect sort of data inputs, perfect examples of where our AI can deliver tangible benefits. You talk to the business, and in the warehouses where they've trialed AI, they are seeing productivity improvements well over 100%.
Wow. I mean, it's phenomenal when you put it that way. I mean, there really are opportunities, I guess, in the arena around AI. Palo Alto Networks, similar yet different.
Exactly. I mean, for Palo Alto, almost it's worth going back right to basics. In prior conversations we've had, Louisa, we've talked often about data, and we've said, look, it's very simple. The demand for data is only heading in one direction. The amount produced, the amount consumed is only heading upwards. And really this trend has been amplified, it's been magnified by AI at present. And yet all of this data that's being created everywhere in the world, it will have zero value unless you secure it, you store it, and you analyze it. And to our mind, there is this huge asymmetry between the cost of cybercrime and the amount that's actually being spent on cybersecurity. One of my favorite statistics I've shared with a few people recently is the following. If you think about the cost of cybercrime in the US globally this year, it's going to be $9 trillion. That's equivalent to a third of US GDP, or about 25 times Apple's revenue. So it's an absolutely huge figure. And yet, by contrast, the actual amount that's being spent on cybersecurity globally is about $300 billion. So a massive imbalance. And essentially, you only need to get caught once, be compromised once, and it can have severe reputational damage. And this is where a business like Palo Alto, to our mind, comes in. When we've looked at cyber in the past, when we've invested in cyber, we've come to the conclusion that either you've got to be very niche or you've got to be very broad. And Palo falls into that latter category. We think that they probably earlier than pretty much any other cyber business we've encountered anyway, have embraced this idea of platformization. So effectively being able to buy from one vendor, i.e. Palo, a very broad suite of cyber products. And this is effectively reducing complexity for chief technology officers, and it effectively moves cyber from being from being multiple glasses of pane to one pane of glass. So essentially a one-stop shop.
Give me those stats again. So you said $9 trillion is the cost of cybersecurity this year globally, right?
Correct. Yep.
And that was equivalent to what again?
It's a remarkable statistic that does bear repeating. It's equivalent to a third of US GDP, or more than 25 times Apple's last reported revenues.
Okay, and that was Alex Gunz, fund manager from Heptagon Capital. And just for good measure, want to say that Heptagon Capital, they are an investor in Quanta Services, GXO Logistics, and Palo Alto Networks. But Alex doesn't have any personal direct ownership in these businesses, and Heptagon, they don't have any corporate relationships with these businesses either. So just for good measure. So talking about kind of both the energy, the power grid, what's needed given this huge move that we're seeing towards AI and this kind of new world of technology. Thoughts, Lars?
Yeah, I'm by far not an AI expert, but I do have a couple of investments in the area, including some that are very reliant on LLM, and hence have a good idea about the energy consumption, etc. And they are to a person telling me that the cost of doing these careers is coming down very rapidly in terms of energy usage, etc. For, of course, in technology improving, but also actually you need less input to get better output as you begin to build better and better AI functions. So I couldn't say with any degree of certainty, but these guys are certainly telling me that while AI currently uses a very great deal of energy, this is only going one way, and that's down. Now, of course, the further uses of AI may pull the other direction, but AI is getting a lot more energy efficient as we speak on nearly a daily basis. So whether that changes that outcome at some level, they would seem to think so.
But I guess it's going to take a bit of time.
Yeah,
It's coming down very quickly.
But it's a law of physics.
Very quickly, because, for example, one of these companies do avatars that are sort of handling millions of queries from millions of people, like advisory stuff, or actually we're doing a very interesting project for the Buddhists in Thailand, of all people, that where you have millions of people that want to have input on their life, etc. And then we're trying to price how much does that cost if a lot of people start asking questions, etc. And the clear view is that the price is only going one place, and that's down.
You've just been selling AI on your trip to Thailand to the Buddhists in Thailand, have you? It would not surprise me.
You've got to do what the man's got to do what he's got to do. But the long and short is that where that costs a lot of money for these queries today, it's going to be a lot cheaper very quickly. Yeah. Is what they tell me. I wouldn't know.
Which is true and untrue, because at the margin it gets cheaper. But just the law of physics dictate that every time NVIDIA comes out with a new semiconductor, the way it becomes quicker is to use more energy. So it speeds up the evolution of what it's trying to solve at a lower marginal cost, but the total cost to consumption in society goes up. So it's apples and oranges, but the fact is we are building out so much capacity on the data center sides that it doesn't really matter. But just understand that the speed at which we operate in these semiconductors is totally linear to the amount of energy that we use. The only way we have speeding up the process is by spending more energy, 1-to-1. But the marginal cost comes down on that. It's the same argument we've had for years on solar panels. The solar panels is now, whatever, $2 or whatever a kilowatt, but it's still too expensive to put up and do and blah, blah, blah. So it's a very dangerous conversation, because I'm only relying on how much capacity, how much uses we have of electricity in society. And the AI sector is at worst going to be 10 to 12%. The problem is it grows at 40, 50% a year. The rule of 70 dictates it's going to double every 2 years. And it is at a time where the world does not have enough investment into carbonization of the grids, of delivering the actual. So it's a very dangerous conversation to just ignore, at least. And you can see it in these stocks that they checked. I mean, Quanta is basically electronics. You have Schneider in Europe, the French electronic company. They are up 40, 50% this year, exactly because the world is short of these products.
What should I buy of digital assets? What's your favorite digital currency? I mean, Bitcoin going through 100,000, that certainly happened earlier than what I thought it would do. And especially when you look at kind of where Bitcoin was just 2 years ago. I mean, we've seen a huge shift in, I guess, not just perception, but also where the money is, and all of these really big funds getting involved now and starting to take things seriously.
Yes, I'm not the person really to ask on the altcoin sector. I'm not really, I don't know it very well. I'm not really a believer in it personally. There's a few bits and pieces, but and I'm not in any way what they call a Bitcoin maxi. It's an asset. It's an asset to me. It's an asset class. My business trades it, and I'm as happy being short it as I am being long it. So I'm not sitting here praying to Satoshi every night that that Bitcoin's going to keep going up. But I like to think that I look at the asset classes that I trade in a fairly dispassionate way, and clearly the wind is blowing in the right direction for Bitcoin to go materially higher, even from here. There's a number of factors that are going to benefit Bitcoin. The regulatory framework is clearly going to be extremely beneficial in the US. I do think that in one form or another, there will be some form of underwriting of Bitcoin by the US government, whether Loomis, I think her name is, whether her Bitcoin reserve bill gets passed or not, I don't know. I think that's a lot. I think people seem to think that's a done deal. I don't think it's anywhere near a done deal. There's a lot of hurdles that need to get crossed there. But clearly, the regulatory environment is going to be better. I do think that Trump is highly likely to reform the stablecoin regulation. Michael Saylor said this. I've been saying it for quite a while as well. I think it's a very neat solution because Trump is going to inherit 1.1 trillion of debt servicing for next year. That at current rates is going up by 500, 600 to 1.6 or 1.7 by the end of next year. Trump cannot have higher rates in the US. There is 37 trillion of debt. I think 3 trillion is being rolled in the first quarter, and I think 7 trillion next year. He cannot afford to have higher rates, but he does need a bit of inflation. They need to inflate the situation.
Which they still have.
Yeah, I do not think the inflation ghost is gone. I think we're going to get inflation back. I think the US bond market is telling you that. And so Trump's in a very, very tough spot because he's going to have a market with he can't afford higher rates. He'll want lower rates, but he wants a little bit higher inflation. And if he reforms stablecoin regulation, he can generate a huge amount of US Treasury demand. If he says to JP Morgan, here you go and issue $5 billion of stablecoin, JP Morgan stablecoin, I won't go into it, but there's huge benefits in terms of clearing and efficiency and speed and things like that. And so he could get a little bit higher inflation and Treasury yields down by doing that, by generating a large amount of demand in the US Treasury market. So I think Bitcoin goes up. I think the estimates for next year are about right, somewhere 150, 200,000 probably sounds sort of okay to me. But I think, if we get a US Treasury debt crisis and the impact that has on the dollar, that's going to have a massive impact on Bitcoin. Bitcoin is still a risk-on asset. It goes up when liquidity is going up, when people want to invest in riskier assets. And if we do get a shock to the financial system, then Bitcoin is not going to be immune to it. I would say, be interesting to go around the table
about
and
volatility also?
I'm a big buyer of volatility.
Yeah.
I think not just in the digital assets, but I think the VIX is ridiculously cheap. And I think owning volatility next year is a very good trade. It'd be good to if you were to say to me, what are my 3 trades? That would be one. That would be one. I'd like to own volatility next year. I would own a cross between Bitcoin and gold. I'm not a gold bug either. But I like to think. Look, if the markets are mispricing something, it doesn't really matter to me whether it's going to happen or not. It's about the risk reward. If you look at Fed fund futures, it is 0% that we have higher rates from here next December. 0, absolutely 0, and the bet it's 2 rate cuts that are priced in, and for the deck, a rate of 25 basis points is the highest rate that you're going to see from where the Fed funds are pricing it. That is ludicrous. I think that's ludicrous in the world that we're moving into with QE, with competitive devaluations. I do not think inflation is gone, and I think that the markets could get a little bit disappointed on that, and that we could see inflation ticking up, and we might see that this experiment fails, and we have to see higher rates, and then all bets are off.
But your three trades would
My
be...
three trades in a sort of a median environment. I would be buying a combination of Bitcoin and gold. I would
You said VIX.
I would buy the VIX, and if you want a stock pick, I would buy Coinbase or MicroStrategy. MicroStrategy, we could do another hour on that on its own, but Coinbase is going to be the huge beneficiary if they do reform the stablecoin laws, because these US Treasuries are going to need to be custodied.
I mean, they're up, what, something like 50% this year alone?
I think they
something
can
like
go
that,
up 10x next year by Coinbase.
Three trades? Do you want to join? Three favorites at the moment, or three asset classes or companies to look closer at?
First of all, I hope FC Copenhagen is
going to
win the Champions League, and it'll be very good. Yeah, but
I can predict his three trades already.
How has the stock done this year?
it's doing quite well.
Yeah, isn't it? Yeah.
Well, it's kind of stable. You know,
But last year was the best performing stock on the stock market, right? Last year.
Yeah, it came off a little bit and now it's going up again.
Lars is one of the owners of FC Copenhagen.
Yeah, that's right, and it's a passion as well. But it actually is also a solid investment. Take Bitcoin, right? Bitcoin has obviously proven through a lot of volatility over the years that, as one of my good friends like to say, the all-time high is somewhere in the future, and it always will be in his view, right? So he's a true Bitcoin maxi, right? On the other hand, you know, with Bitcoin at 100,000, right? Let's say the wildest people, they say it could go to 1 million, right? I think that would make it a bigger asset class than gold. It's not unthinkable. But even if it went to 1 million over the next 5 years or something, that's 10x, right? I mean, it's not like it would be outrageous to find a good stock or do an options trade or do something smart and make 10x, right? So it's kind of gone out of that, and that's like an extreme scenario in my view. Whereas the same friend bought a month's salary worth of Bitcoin at 77 cents many years ago, right? And he's made his money back 130,000 times on that, right? And that's kind of interesting, right? Because some people bought Bitcoin in the very early days. I actually myself bought Bitcoin below $200 at one point. Unfortunately, sold it far too early. But that sort of excitement that this is something that could take a poor person to be very rich, that's not Bitcoin anymore, right? Because even if it does 5x, 10x, that's not an outlandish return. You should not to be sniffed at, but in many places in the world, if you get a little bit lucky, you can make 5 or 10x, right? So I think that sort of excitement. So the way I look at it, not owning a single, well, I do own it. One Bitcoin is sitting in the National Museum in Denmark as a representative of the history of money, but that's about it. And it's a physical representation of it. But I do have investments in crypto, but the way I do it is more finding some funds, because there's so many huge number of altcoins out there. Very, very, it's more than a full-time job if you try to roughly keep a tab on it, right? So I find people that follow these things very closely, get into new projects. Typically, these guys are very eager to get institutional style investors, so they will get big discounts on the token value that I couldn't negotiate myself. So they also get it cheaper than I would, hopefully make better choices. And then they will have, out of 50 coins, they will have 46 misses, and they'll have 2 that sort of does okay, and then they'll do 2 massive home runs, right? And that's the way I would address it, right? I mean, I think it's absolutely fine. I think it would be bordering on irresponsible for a broadly diversified portfolio not to have a couple of percent in sort of the bigger crypto. I think that now, 5 years ago, people thought it was irresponsible to have them. Now I think it would be irresponsible not to have them, right? Just in case that this development continues. But the way I approach it, specifically myself, is to find people that are smarter than me, follow it better, get better prices than me, and then take a lot of punts on new projects, because there will be new projects that do 100x, 500x. And if you can just get 1 or 2 of them, you can afford an awful lot of mistakes, right? And I have to say that particularly my main fund has done far better than Bitcoin in the last 6 years by deploying exactly that approach, right? But it is based on a lot of misses and an occasional very, very big home run, right?
And what's in your main fund? Ish.
To be honest, I don't really know. Lots of new projects, and then occasionally some of them make their token generation event. They're sort of the equivalent of an IPO.
Sure.
And all of a sudden it goes from something you funded with 10 $10 million to something that's $2 billion market cap, right? So that's my approach to it, and it's been okay for now. But I do think if you're not sort of into taking very big risk, there's no problem in having somewhere between 1 and 5, maybe 10% of your diversified portfolio in the bigger ones like Bitcoin, like Ethereum, and the big names. But for me also, and I think for many of the young kids that are investing in this, not that I'm one of them, but the excitement is the thing that you can not be rich today, but you can be rich in 2 years. And it actually has happened to a lot of people in Bitcoin and Ethereum, right?
But don't you think a lot of people think if it goes to 50, it's just a buy? I mean, now we've hit 100, surely it's going to hit 100 again, even if it drops to 50.
It probably is a buy, but it's not a 100x buy in any of these scenarios. And that's what I'm saying. It's more like another asset, right? It's more like gold. It's actually also now quite heavily correlated to the S&P. You know, the S&P backs off and Bitcoin falls 10%, right? And so it's not even a diversification like it was sold in the beginning, right? So I think the excitement is in some of the new projects. Bitcoin is in a class of its own because it has this sort of store value story, which wasn't the original story, but that's where it's pivoted into, and that's probably okay as long as enough people think it has value, and that goes for any asset. But the real exciting thing for me is what can blockchain do to the economy, and that's what Russell touched upon. You know, how much more efficient it could make a lot of, particularly certainly in the financial industry, where we know the inefficiency of all these delivery and settlement systems and the time consumption and the cost, and vast majority of these things could be hugely improved by just doing a Bitcoin where you know exactly who owns the asset. It transfers immediately between parties. So that's for me, as a technology, that's the exciting part for me, not so much the speculation. But in the meantime, of course, the speculation is also fun, right?
Yeah. And I guess this ties also in, you had a stat, Steen, with virtual investments versus non-virtual investments, and how we've seen this huge switch. Like I think your stat said it was especially around the 80s that you kind of saw a switch from the more the what do you call it? The
Intangibles, tangibles.
yeah, intangible. But what your thoughts on what the gentleman have been saying, and your favorite 3 areas to look at for 2025?
I'm totally with Russell. If you don't own volatility in 25, you need to go to prison, the investment prison. Everything is dirt cheap in volatility terms, and just to put some framing of it, you can buy put spreads, call spreads in pretty much any product you want. Probably should buy the put spread first for a lot of it. And you can constantly roll them on a monthly basis or a quarterly basis, and you will make one of these quarters, you're going to make a lot of money. So long volatility is one of them. The second one is, I think I am very long inflation. I think inflation is going to shoot to the upside. And the reason I like that trade is it's extremely skewed. There's nothing in the world right now that will take inflation down. I mean, all of the experiments, all of the extra spending, all of the technology investments, all of it is hugely inflationary. So, forward 1 year trades at 2.7, I could easily see 4% inflation. It's a very good play. And it's a huge insurance if you want to maintain long positions in equities. And then the equity play will be 50% Argentina and 50% long industrial Sweden. Industrial Sweden because it delivers everything Europe needs. And I think we talked a lot about why I want to be long Argentina. I really believe in the story of Milei. I really believe in that the market will give benefit to a country, which we should not forget was the 5th richest country in the 1930s in the world. It's just come from being a bunker case to being, seeing some emerging of the light. So if that can continue, I think the stock market in Argentina can go up as much as Bitcoin certainly, and maybe not as much as Lars's projects, but it could follow the 40, 50, 60% that Russell says is in Bitcoin.
Who's going to win?
Ask a question, because we're very much currency guys, and you also, right? So with the Stocky, with the Swedish deal, I mean, is this also an outright currency play just by Swedish krona?
Yes, absolutely. I mean, think about it. We sit in Denmark, Sweden. It's exactly the same. It's 63 euro in the krona. It's ridiculous. I mean, it's absolutely ridiculous. They're cutting taxes. They're cutting regulation. They are looking at new ways to do things. Exactly what you say is not happening in Europe is actually happening in Sweden. The opposite case is the richest country in the world, Norway, which is becoming totally communist. But Sweden is doing the right thing far more than Denmark is. For instance.
Mexican peso?
No.
No?
I think it's a very political deal. There's no reason to get involved in very political deals. There's huge opportunity, absolutely. Brazil, huge opportunity.
But even with Trump coming in and then
no.
deals being made with the Mexicans.
I think when you invest for the medium long term, you want to compound on things that are working. You don't want to compound on there are once in a while an opportunistic ability to do something, but I see enough plays that are just buying good value, long inflation, long volatility, and long these equity plays that's going to make a difference for the world.
Let's just listen to David Wu on the Mexican peso.
Like obviously right now, the big story of the last 2 weeks is that leaders, of foreign countries are literally like lining outside Mar-a-Lago trying to basically get to Trump. In fact, it's also funny. It's almost like high school. It's like peer pressure. And then everybody is trying to cut the line, trying to get to be the first one to get to Trump so that they can get the best deal, because nobody wants to be left behind. People think that whoever's going to be left behind are going to get the worst deal from basically Trump. Now, in my humble opinion, the first country that's going to get a deal from Trump is going to be, of course, Mexico. Okay. Now, there are a lot of reasons for this, but not least of all because what a lot of people don't fully appreciate was the fact that the outgoing Mexican president, AMLO, had an incredible friendship with Trump. In fact, I think, no basically Mexican president had the kind of relationship that AMLO had with the US president as was under Trump. Trump will call him up over the phone. AMLO will call him up over the phone on their own personal initiative. AMLO was the reason why Trump basically was able to solve the immigration issue, by the way, because AMLO agreed to basically process the asylum seekers in Mexico at the time. Now, and then, of course, the relationship between AMLO and Biden has been terrible. AMLO hates basically Biden, and for all the good reasons, right? So from that point of view, to begin with, AMLO is still the kingmaker in Mexico. If you look at, what Claudia Sheinbaum, the president, basically Mexico today, who's a protege of AMLO, what she's been saying and doing of late, it is very clear. They understand Trump. They understand how to basically, move the needle with Trump, right? Just last week, Mexico, all of a sudden, out of the blue, seized 1 ton of fentanyl, which is an historic record, basically, seizure that's worth 200 million pills. I mean, just think about that. A week after, Claudia Sheinbaum had a conversation with Trump. Trump needs stuff in Mexico because Trump deportation drive will rely very much on the cooperation of Mexico to agree to take in these deportees, because otherwise we're going to have to send them somewhere. So I think that Trump will have to be very nice to Mexico if he wants to solve the border issue. And the Mexican will make it very easy for Trump, for him to be nice to them. And I think that renegotiation of USMCA is probably not going to be as big a deal as people think. I think if you look at the chess pieces on the board right now, all suggest that actually doing a deal with Mexico, to me, is going to be sort of the low-lying fruit. And that I would think is going to happen sooner rather than later. And that, of course, should be viewed as being very constructive for the Mexican peso. Beyond the carry, I can see another 5% of appreciation, maybe even 10%. Again, these days, I don't make, 12-month forecast, that kind of thing, because that's ridiculous. I think long-term, I trade very short-term. But I can imagine, in the first quarter of next year, if I have to guess which is going to be the best performing currency, I can see the peso being one of them.
So that was David Wu of David Wu Unbound. Russell.
Yeah, just coming back on Lars's point, it's sort of, the conversation gets a bit silly when people start talking about $1 million in Bitcoin. If you start actually projecting Bitcoin adoption against internet adoption, things like this, then $1 million is extremely conservative. And if we're not at $1 million in Bitcoin in 10 years, as Lars says, then something's gone very wrong. I'm just talking about next year. But I think that the price of Bitcoin, when you start looking at market cap and you ignore these huge numbers, then Bitcoin can go much higher than that. So I do think that there's still significant legs in the story that it can produce very significant multiples going forward. One thing that I wanted to just bring up, because it is something that Lars is involved in, with the AI story. AI is, like, obviously on the asset management side, it's transformative. We have an AI, and the power of the processing and the predictive, it's getting better and better. The more information you feed it, the ability to go and pick what would not be, you'd think would be relevant as a predictive factor in a whole variety of asset classes, and to consolidate this information in terms of shipping traffic on rivers on the price of energy, things like this, it is transformative. And so it's going to really have a huge impact on the asset management business. But AI has got some significant downsides as well. I actually sent Lars a video yesterday on how AI now is generating these videos. It was a video of different AIs about I'm creating a sirloin steak and I'm cutting it and steam's coming out of the steak I was salivating watching these videos and they're not real. And this is a problem in that what is truth? What is truth and how do you verify that you're dealing with someone? Lars has got an avatar of him. And you can have a conversation with him, and it's in fact the avatar is more interesting than he is.
This is the avatar. I'm not here.
And so I think that is something that, in terms of the blockchain, brings huge efficiency benefits. But you need to be operating. You need to know who you're dealing with, and they need to be, depending on what your industry is, they need to be KYC'd and identified. And so the solutions to that, Lars is involved in a business that does that, which I'm very interested in. And those types of things are very interesting going forward, because AI, while it's bringing such huge benefits, it does have material downside that needs to be managed.
Lars?
Yeah, I think that the thing is that right now you can maybe just tell the difference between the avatar and me, perhaps because the avatar is too interesting, as you said, right? And you can just tell the difference between that steak and a real video, perhaps, but you won't be able to in 12 months, right? That's clear. So this is all about an explosion of content, vast majority of which will be AI generated, and unfortunately some of it will also be generated with malicious intent, right? To try to steal your money or do other vicious things to you. So the whole idea that we have to get used to that the default position on any piece of content is we don't trust it until it's verified, right? You have to not rely, even if it's your best friend calling you, 12 months from now, they'll be able to fool you, right? So we have to get people used to be very, very skeptical at the content that they receive. And then we got to find ways that we can indisputably verify the person behind that piece of content, whether it's actually a genuine or real world piece of content that you want to verify, or you want to verify, Lars Seier, have actually approved this avatar to do some of my work, right? And that is a critical thing. And correct, as you're saying, the Concordium project that we're building is a blockchain that's dealing with how do we make unquestionable verification and identification of actors, be those real world actors or AI actors, but of course particularly relevant with not real world content. And it's going to be a massive problem. People don't really fully fear it enough because they haven't all yet tried to be defrauded. But I will say with certainty that 24 months from now, everybody will have experienced an attempt at fraudulent activity, and many of them will have succumbed and get fooled by it. And then, of course, it'll be top of mind for many people. And finding those solutions that we can indisputably say, this is a piece of content that is approved by this organization that I do trust, or this person that I do trust, is a very important thing, because otherwise AI could run completely amok, right?
And I saw it slightly different, but yet the same. I also saw that there's a huge amount of hacking happening from North Korea, as it were, but and that we're only going to see more of that as well, regardless of where it's coming from. But is the trade then, does it bleed into like by these companies that then deal with I guess digital security?
I would hope so, because I'm involved in a couple of them. But of course, there are many other interesting things in the world. But that is a problem that needs solving, and it needs solving quick. And it's not as much as high on the general attention scale as it ought to be. But that will change, because we will all be subjected to fraud, right? I mean, good criminals are not stupid, right? And they have gotten now some wonderful tools to make very intelligent crime, and they will use them. I mean, actually, criminals are early adopters of many technologies. Early days of internet were a lot of bandits doing weird stuff, right? And then, of course, smart criminals are looking at AI and rubbing their hands because it makes their life so much easier, right?
Steen?
I just want to take it up to the helicopter. I mean, the one of the most proficient users of destructive AI is the Chinese and the Russian government. You should not forget that both the Chinese government and the Russian government's number one priority is to undermine the Western society, and the way they do that is by having an army of people who on a daily basis engage on X and whatever and do it. So, you know, for me, and I'm sure it's the same for everyone else in the room, but for me, I start by the position not trusting anything. And to be honest, I listen less and less to the rest of the world and just do my own stuff. If I'm going to make mistakes, it's going to be based on the research I did myself. It's not going to be because even as good as it is, Perplexity or something says something. I'm going to the source of everything now, which I think is unfortunate. And the final comment being that, you know, the political book to read right now is Alexander Dugin, who is the advisor to Putin, who wrote a book called The Fourth Political Theory, the first three ones being liberalism, communism, and fascism. But the crux of that is that you should deny truth, you should lie about everything if it's not in your favor. You should play on good old values in society. You should be religious. You should believe in a strong woman or government, and so all this. So it's become not only in, you know, people trying to scam your money, but your government is also trying to scam you. And every single election that's been fought from center left has lost, and every government that's done it from center right is winning. And a lot of it, the one common denominator is that they are all engaged in a virtual reality bullshit exercise of lying. I mean, no one lies more than Trump. He's on record for, in the last presidency, to lie 220,000 times, right? So the alternative reality is very hard to comprehend. And I'm a guy who spends 10 hours a day reading, and I don't understand anything of what goes on in the world. God forbid someone sits for 10 minutes and goes on to X or to some of the other social media and try to understand the world. I think it's hugely complicated.
Lars?
Yeah, there's just one thing I wanted to add of these sort of problems with AI that probably are under prioritized by the average user. One thing is you need to know who's behind a piece of content and how it was generated. But the other thing is all the data you feed into these open LLMs. Where is that data going, right? There's a lot of companies that are very reluctant to use the big engines because where does the data go? Who can use that data? Who can get access to that data? So another spiel there's also how do we build functional LLMs that can do the stuff you want them to do, but maintain all of your data in a very private environment, right? Which a lot of companies also working on, of course. But I think that's something you should not forget. You know, if you sit putting in very private things in one of these big, you have no idea where it ends up and who could be looking at information, who could be abusing that information, or if you put something of critical business importance or value, you have no idea where this data is going, right?
You've all given us a lot of things to think about. In closing, on a slightly lighter note, who's going to win the Premier League? Predictions?
Well, it has to be Chelsea, of course. You know, myself and Lars have had an ongoing bet for 8 years of who finishes, a case of wine on who finishes higher. And for 7 years, I won because Chelsea were superior to Arsenal. He never paid up, of course.
Lars?
Oh, we quit or double, and then
It was a double or quit.
If you quit and double, eventually you sort out all your debts, you know.
And obviously last year he got his 75 cases of wine back. So this year I think we're going to be back on trend. Chelsea are going to win it.
It's probably my biggest individual financial gain last year was not having to pay that bill, right? But yeah, I mean, I would say Arsenal, but I would have said that if you had asked me any other year in the last 20 years since we last won it. So I'm a little bit in doubt but I thought it was going to be Manchester City that we had trouble with, like usual. But it seems like it's Chelsea this year. We don't have a problem with Steen because his team is not in the Premier League. So
Steen?
Yeah, but I'm the only one who actually played football for real here, so maybe I have a bit. There's no doubt Liverpool is going to run away with it.
Okay. Gentlemen, thank you very much. We'll have to wait and see on all the predictions. Thanks so much. It's been a lovely afternoon talking to you. So thank you very much, Lars, Steen, and Russell. Thank you.
Thank you.
Thank you for having us.